Hello everyone, welcome back to Stock Market Meridian. Today is 9th July 2026 and you're watching today's pre-market report. Let's begin our video with global markets data. Starting with the US markets, both the S&P 500 and the Dow Jones indices closed in negative zone. However, the Nasdaq managed to end the session in positive territory as the heavy selling pressure seen earlier in the AI and IT sector cooled off significantly. Coming to the European markets, all the major indices ended the session in the deep red, reflecting broad-based weakness across the region. Now looking at the Asian markets, Japan indices closed with strong losses yesterday and have opened today's session at almost same weakness level. China markets are also ended in the negative zone. Meanwhile, South Korea markets, after crashing nearly 5.5% yesterday, have opened today's session with an impressive 3% gap of recovery. We will discuss about GIFT Nifty outlook towards the end of this video. Now let's move to commodities. In the international market, US WTI crude oil is trading nearly $73 to $75 per barrel, while Brent crude oil is trading nearly $77 to $79 per barrel. This significant rise in crude oil prices may impact our markets today. In Indian commodity market, crude oil futures gained nearly 5.5% yesterday, while natural gas futures declined by around 1.2%. Coming to the precious metal segment, Indian gold futures closed around 1.16% lower. However, international gold futures are trading in green. Similarly, Indian silver futures ended the session with sharp 3.2% decline, while international silver futures are currently trading around 0.5% higher. Now let's check ADR's data. Yesterday, the ADRs of Reliance Industries, Wipro, ICICI Bank, Infosys, Dr. Reddy's Labs and HDFC Bank all closed in negative zone, witnessing strong selling pressure. This indicates the overall global sentiment remains cautious and these stocks may remain in focus during today's session. Now let's move to FIIs and DIIs data. Yesterday's market fall was quietly interesting because despite such a sharp correction, FIIs were actively net buyers, purchasing shares worth around 1962 crore rupees. Not only FIIs, even DIIs also remained buyers with net buying of nearly 790 crore rupees. This clearly indicates that institutional investors are not treating that ongoing geopolitical tensions as a major long-term negative for Indian markets, which means yesterday's entire market fall was mainly driven by panic selling from retail investors rather than institutional selling. Now let's check economic calendar. Yesterday, US crude oil inventory data came in higher than market expectation. This is generally considering negative for crude oil prices, but positive for equity markets because higher inventory usually indicates lower demand pressure. And we will discuss this FOMC meeting updates during the geopolitical session. Talking about today's important events, the market will closely watch US initial jobless claims data along with the US existing home sales data. And tomorrow, investors should keep an eye on German CPI inflation data and also India's foreign exchange reserve data. Before moving ahead, a quick reminder. I upload pre-market report every morning before market opens and also post-market report every evening after market closes. So if you don't want to miss any important market updates, make sure to subscribe to Stock Market Meridian and press the bell icon. Now let's move to geopolitical updates. Biggest global update comes from US Federal Reserve. According to the latest FOMC meeting updates, Federal Reserve policymakers are deeply divided over the future direction of interest rates. Fed Chairman Kevin Warsh himself described the situation as a family fight because some policymakers believe inflation is cooling down, which could eventually support interest rate cuts. However, another group believes inflation may remain sticky because tariffs and supply chain disruption making rate hikes necessary in the future. Despite these differences, the committee unanimously decided to keep interest rates unchanged between 3.5% to 3.75%. And interestingly, Chairman Kevin Warsh continues to avoid giving any further guidance to the markets. Instead, the Fed clearly stated that every future policy decision will depend completely on upcoming economic data. The minutes also highlighted that although energy prices have fallen sharply, inflation risks still remain because of tariffs and ongoing Middle East disruptions. And another interesting point mentioned was about artificial intelligence. The Fed believes that massive investment into AI infrastructure could continue, increasing demand for technology products and electricity, which may also keep inflation under pressure. Overall, the Fed message remains simple: no promises, no future guidance, everything depends on incoming data. Guys, if you are finding these updates useful, don't forget to like this video and please share this video at least with one friend so that your support really helps this channel to grow. Another major geopolitical development is the US Central Command confirmed another round of targeted military strikes against Iran. According to the US, the objective is to weaken Iran's ability to threaten international shipping through the Strait of Hormuz. Also, Iranian state media confirmed multiple explosions across several coastal sites and port locations. Meanwhile, while returning from NATO summit in Turkey, US President Donald Trump officially declared that the short-lived US-Iran ceasefire has ended. Trump also warned that if Iran targets more ships in Strait of Hormuz, the US may take stronger actions. He even hinted that future developments could push oil prices significantly higher. Following these comments, Brent crude oil surged towards $79 per barrel yesterday. On another side, Iran's deputy foreign minister strongly criticized Trump's statement and called him as a criminal. Means overall, these conflicts may continue further for more few days. But what do you think about these things? Let me know your opinion in the comment section. Now let's move to company's specific updates. TVS Motor has partnered with Indian Oil to modernize India's LPG cylinder doorstep delivery system. Indian Oil's nationwide network of more than 13,000 LPG distributors will gradually deploy TVS King Cargo HD cargo vehicles for daily deliveries. Management believes these vehicles will reduce operating costs, improve profitability, and also support India's green mobility mission by lowering carbon emissions. Next update is from NALCO and NLC India will jointly establish a 1080 megawatts captive thermal power plant at Odisha. The project will operate through a 50-50% joint venture with equal ownership and management rights. The plant will primarily supply electricity to NALCO's upcoming aluminum smelter expansion project under a long-term 25 years power purchase agreement. Coal supply will comes through NLC India at Coal India notified prices, while both companies are also exploring 200 to 250 megawatts of renewable energy integration. Next, IRB Infrastructure reported excellent monthly business numbers. June toll collection increased 28% year-on-year to around 808 crore rupees. Management attributed this strong growth to higher traffic volumes, traffic revisions, and operationalization of new projects. And the company currently manages 28 highway assets across 13 states, handling nearly 1.5 million vehicles crossing every day, making it one of the India's largest toll operators. So next, Graphite India has decided to shut down its German operations because of prolonged weak demand and continuing impact of Russia-Ukraine conflict. These businesses contributed only about 4% of annual revenue but carried a negative net worth of more than 322 crore rupees. This closure is expected to take nearly 6 months. Overall, management believes this move will strengthen the company's long-term financial position. Next, Phoenix Mills reported another stronger quarter. Retail consumption across its malls jumped 32% year-on-year, reaching nearly 4,727 crore rupees. Commercial office leasing also improved, while hotel properties delivered healthy double-digit growth. The residential business also continued performing well, with strong premium home sales. Overall, business momentum remains very strong across all segments. Next, Tata Steel delivered another solid operational quarter. India's crude steel production reached 5.82 million tons, while velvet stood at 5.17 million tons, both growing around 11% year-on-year. Automotive, retail, branded products, and e-commerce all recorded impressive growth. The company's digital platform also witnessed a 61% increase in gross merchandise value, but the international operations remained mixed. The Netherlands business faced a temporary production disruption, while the UK business continued to progressing towards its electric arc furnace project. Overall, the Tata Steel's quarterly business performance looks quietly healthy. Next, JSW Energy has commissioned 1081 megawatts of renewable energy capacity since April. This takes its total installation capacity to over 14.5 gigawatts, with renewables now contributing 61% of its entire portfolio. And the company has also commissioned a wind blade manufacturing facility in Gujarat and remain on track to achieve its long-term renewable expansion targets. Next, Ather Energy clarified recent media reports regarding its fundraising plans. The company confirmed that its board has already approved raising up to 2,500 crore rupees, including 1,500 crore rupees through QIP. Management emphasizes that there is no undisclosed information affecting the company's stock price. Next, HFCL launched its new Optic AI brand focused on next-generation AI data centers. The company believes demand for AI networking infrastructure will grow rapidly over the coming years and aims to position India as an alternative manufacturing hub for global hyperscalers. Next, KP Energy successfully commissioned the first phase of 50.4 megawatts wind power project in Gujarat for NTPC Renewable Energy Limited. This project uses Suzlon wind turbines and officially began commercial operations on 8th July 2026. Next, heavy rainfall triggered the collapse of waste mound at Antony Waste Company's Pune facility, damaging the administrative building. Emergency rescue operations are currently underway. Fortunately, the plant was already under scheduled maintenance, resulting in very limited staff presence. Management has clarified that there is no material impact on the company's overall business operations. Finally, let's look at GIFT Nifty data. Yesterday, GIFT Nifty closed at around 23,878 level with nearly 2% decline, and today also opened at same level, indicating a weak global sentiment. So that's all for today's pre-market report. If you found this video useful, don't forget to like, share and subscribe to Stock Market Meridian. I will see you again in today's post-market report after market closing. Thanks for watching. Signing off. Bye bye. Jai Hind.